Today, the Reserve Bank of Australia cut its benchmark interest rate to a record low of 2.75%, with the expectation a cut will encourage sustainable growth in the economy. Joining me on the line to discuss this further is Athol Nourse, Global Head of Institutional Business at Synergy FX. Athol, what are your thoughts on this rate cut?
The chance of a rate cut 2 months ago was almost non-existent, but with the spate of weaker than expected economic data in March and April, it came down to the flip of a coin today, with the market split on the decision and economists favouring a hold. Today's decision boiled down to the need to increase consumer spending and bring down the Aussie dollar, coupled with concerns over the global recovery.
The high Aussie dollar is weakening manufacturing and is driving up unemployment. So how do you think the RBA decision will influence the strength of the Aussie dollar?
Traditionally, a rate cut will see the Aussie dollar fall, and it didn't disappoint today, as it plummeted to $1.018 as soon as the decision was announced. This was the exact reaction the RBA would have been hoping for. And you feel the currency speculators were really banking on a hold after the RBA had been fairly conservative in the past. So it's no secret that the Aussie dollar has been a strain on Australia's growth, and the RBA highlighted this in their statement today. However, with Europe signalling it may cut rates even further, this could be a short-lived dip.
Australian unemployment currently stands at 5.6%. What results do you think we can expect to see in Thursday's data release?
Looking at recent data and today's rate cut, I would be betting on unemployment to increase by around 0.1%. I think the RBA is expecting an increase, and this would have been one of the catalysts for their decision to cut rates today. We've seen ANZ job ads on Monday declined 1.3% compared to last month and sits at 25% below their peak in 2011. However, it's very difficult to use job ads to predict unemployment, as the increased use of social media and other sources have affected internet and newspaper advertisements. The US job numbers last Friday point to global uplift in employment. And from my first-hand experience, I've noticed calming in the Australian job market, but I would still expect a lag from previous months to push up slightly this month.
Australia appears to be going through an extended period of lower growth. What are your forecasts for growth in Australia?
There's no doubt growth has slowed in the last few months, with contraction in the service sector and growth in the private sector credit. Australia's Treasury Department lowered its growth forecast last week off the back of a decline in revenues due to weaker company profits, lower commodity prices, and our high exchange rate. So manufacturing growth has also fallen. It's now at its 4-year low. Business conditions hit their lowest level since 2009. Having said that, all that the Australian market slowdown is nothing like the slowdown in Europe. And the current pullback is more of the market taking a breather as opposed to fundamental breakdown. On a positive note, the current period of lower growth, the fact that households are paying off debt, saving more than ever before, setting up the Australian economy for a big run once a global recovery gains momentum, and as households will have a greater pool of funds to invest and spend.
That's all for now, but stay tuned to Dukascopy TV for the latest financial news and updates. Goodbye for now.